Some business news now, and Stephen Carroll joins me once again on set. Stephen, hello again. You're starting in Argentina and the country's triumphant return to the markets.
After 15 years in financial purgatory, Argentina has made its return to the international bond markets. The country was looking to raise $15 billion. It received bids worth more than $65 billion. The sale is a milestone for Argentina, which had been frozen out of the markets after defaulting on its debts in 2001. Yuka Royer has the story.
A new chapter for Argentina's economy. With orders worth $65 billion for new bonds of up to $15 billion, the country has come back to the global credit markets with a big bang. This after 15 painful years left out of the world's borrowing club.
We have now left behind years of unnecessary financial conflicts with the world that were badly handled and only provoked losses, unemployment and economic stagnation for Argentina.
The biggest obstacle to the country's return to the bond market was a small number of holdout investors, those who refused a debt restructuring deal after Argentina's default in 2001. They hounded the country in courts around the world, demanding a better payoff. A recent repayment deal broke that impasse. Buenos Aires agreed to pay 75% of their claim. A large chunk of the new bond sales will be used to pay them back. The election of Macri last December also raised hope the country would become a financially stable and attractive foreign investment opportunity again. Experts say, however, that it will take more time and effort for a full economic recovery.
The return to the bond market ends Argentina's 2001 default crisis. It will allow the country to get into debt again, which is a good thing in the short term. But going forward, we need to fix other budget imbalances because the debt doesn't work as a unique strategy.
A number of problems remain. High unemployment, staggering inflation and the widening gap between the rich and the poor are some of the issues the president needs to tackle.
That was Yuka Royer reporting there. OK, Stephen, tell us what's happening on the markets.
Your oil price giving European shares a bit of cheer at the open today. We're seeing a rise across the European markets. Among the companies on the up is the brewer AB InBev. Their shares up slightly as news emerged that it had accepted a $2.5 billion bid for beer brands including Peroni and Grolsch. The deal is part of InBev's takeover of SAB Miller. Over on the Asian markets, we saw a recovery too, particularly after the hammering that Japanese shares got on Monday. The Nikkei in Tokyo closing up almost 3.7% at the end of the day, so recovering all of those losses that we'd seen earlier. Oil prices looking a lot more stable today in trading too. The Brent crude index actually up on the day at almost just over $43 a barrel in trading. That's of course after we had the no deal to freeze oil supply at the weekend, which had caused some concern for the markets on Monday. Some more of the day's business headlines for you next. Shares in Netflix slumped by up to 8% after hours after new figures showed its growth rate was slowing down. The online streaming company says it expects to add 2 million subscribers outside the United States in this quarter. That's less than 2/3 of what had been expected. Netflix has been investing heavily in original programming, including comedy hit Unbreakable Kimmy Schmidt, in an effort to attract new customers. A jump in sales in the United States has helped to boost earnings at French drinks company Rémy Cointreau. The firm saw global sales rise by almost 9% in the 3 months to the end of March. Its cognac at Rémy Martin saw increases in the United States and an improvement in sales in China. Shares in the company up 5% in Paris. And the advertising giant Publicis has warned that loss of several major clients could hurt its earnings in the next 6 months. Procter & Gamble and Coca-Cola are among the big names who dropped the French firm last year. Overall, Publicis saw sales grow by almost 9% in the first 3 months of the year to €2.3 billion.
OK, finally from you, Stephen, a story very close to my heart. French wine is still the #1 choice for foreign drinkers.
New figures from the International Organization of Wine and Vine show that French wine is #1 in global exports, worth more than €8 billion last year. Overall, global wine exports rose by more than 10% in 2015 and are up by an incredible 75% in 10 years. Growth in wine drinking is being driven by China, where wine sales were up by 3% last year. But the French still drink the most wine, with 41 litres per person per year drunk. I'm not going to tell you
That's
how much of that
very
I
close to
possibly
your daily
account for.
intake, isn't it, Stephen? Almost.
And I'm holding it together nonetheless.
Thanks very much, Stephen, for that spin through the business news this hour.